Hello, friends and traders, and welcome to the Coach's Playbook. Not live today. We're doing a throwback edition. All the coaches are out of the office. So please sit back, relax, and enjoy this episode all the way back from 2017 in the old Topstep office, doing some Q&A. The nostalgia is real. We'll be back live next week. Have a great rest of the day.
Hello, traders, and welcome to Coach's Playbook. It is Tuesday, just after 2 o'clock, and a little trouble getting started. We apologize for that, but all three of us say thank you for trusting us with your time. I'm John Hoagland, Mick, Dan Hodgman. Hello, gentlemen. How are we?
Howdy.
Howdy, doing
great.
well. How are you, John?
Me? I'm great.
You always ask us. We want to know how you're doing.
I'm good, man.
Good.
I've been sitting here drinking the same cup of coffee since the market forecast this morning.
That's a cold cup of coffee.
And, well, I refilled it a couple of times. So, feeling good, feeling right. Thanks for asking, gentlemen. Today, we're going to be having, what is it? Hashtag Q for Coaches. We're going to be taking your questions, whether they've already been sent in. If you have questions that you want answered now, just type them in the comment section on the Facebook page. And we're going to get to as many as we can. And hopefully, this is interesting. We're excited about it. I especially like the ones that we don't see coming because, we answer them on the fly, which is
Keeps on our
Fun.
toes.
It's a lot of fun.
Absolutely.
Bring them in. Lay them on us.
So I think we're going to start first with some of the ones that have been already sent in. Again, please, if you have questions, write them in the comment section in the Facebook page, and we'll get to those as well. So how are we going to start this?
All right, I'll read it off. First question we have is from Fred. Fred says, can you talk about how you create the weekly kickoff levels? Do you look for levels which are a certain distance off the market at the close of business on Friday? Do you just look at a chart and eyeball the levels?
Well, it takes some considerable time. I use eye of newt and tongue of frog, and I mix those together in a cauldron. No, they are not meant to be basically put on either side of the market. That's why sometimes from week to week they'll remain the same. For example, 3 of them were touched yesterday because there are more important levels as far as market information versus, where do we think we might go the following week. Does that make sense? So how do I find them? Well,
You just eyeball them, don't you? You just look at the
Yeah,
chart and know
just-
exactly where it's going to go.
I
huh?
just eyeball it and say this is where it's going to go. No, it's partially experience. It's partially visual. In a way, it is a little bit just like looking at the charts and saying, this sticks out to me. This looks like an area that the market might try and test out or at least get to as far as targets are concerned. The idea that those levels are important to longer time frames is always forefront on my mind. I'm always looking at, okay, if I have big strong money in this market, where am I going to be looking to need to adjust any inventories I may have, whether it's lightening up on my positioning or adding more to my position. So that's why I think that those levels are as powerful as I think they are. I mean, I like them. I tend to take trades off of them. I think that they're useful for everybody that is paying attention. Yesterday, they most certainly were useful in 3 of the 4 markets that we were talking about on the market forecast. So it's a combination of things, Fred. It is visual. It is technical, and a little bit of eye of newt.
All right, let's hop on to the next question. This one's from Paul. Kind of a multi-question question, couple aspects to it, so maybe we'll have to break it apart to answer it. So Paul says, I was wondering if you can explain tick data and how it shows up in the time and sales. For example, 1,000 contract order is sold as A, a market order, or B, a limit order.
Okay.
Well, first off, we're not going to know if it's a market order or a limit order or whatever. everything is just, it's going to be where that market was filled. As far as tick data, I think John had some good information on that to talk about.
Well, if I have an order in to sell 1,000 anything, I'm first off, I'm a little bit crazy, and if I'm gonna sell 1,000 at the market, basically I'm gonna wipe out, if I'm selling them and there's, let's say, an average of 200 on every bid for 5 prices, and if I sell 1,000, I'm basically going to hit all those bids until the 1,000 have been satisfied. I'm going to take out all the bids for 5 ticks. If I'm going to be working that $1,000 contract order on the offer, any part or all parts of that offer can be taken at any time, as long as it's the nearest offering price.
Right, so time and sales basically is going to show you the price and the quantity at the time that traded. So these are only executed orders. It doesn't matter if it's a market order or a resting limit order. Second part of Paul's question, if the order were to be filled with either small orders, let's say 1 lots versus a large fill or a mixture of the two, how would it show up in time and sales? Like I just mentioned, time and sales prints trades that are actually executed, whether it's 1,000 1 lots or 1,000 lot, 1,000 trade at a certain price, it'll print that price. Next question, when do you expect Forex trading to become part of Topstep Trader? That's from Siraj.
I think it's early 2018. I know we're in the testing phases of that right now, which is really exciting.
Yeah, definitely. We're doing small beta tests right now, and we're planning for launch of Forex in 2018.
Yep.
Next question from Matt. Loving the Coach's Combine. Can you talk about what you think helped you mount this comeback and how you keep your cool when you were down?
I think John and I finally had a moment where we finally said we need to plan. John and I hadn't really put together a great plan. We had a couple rules based around it, and we finally said, let's sit down, let's formulate our weekly plan, how we're going to trade this, sit down each morning, break down these markets. When we finally did that, kind of found our groove a little bit, started making some educated trades, started really sticking to the fundamentals, and I think got comfortable with trading with each other and trading in front of everyone, because there was a little intimidation factor, no doubt about that.
I can only imagine.
There was a little bit of an intimidation factor put on strictly by us. No one made us stress over it. We just kind of, there was a little bit of intimidation, and I think that
Stage fright.
Yeah, stage fright. So.
Yeah, when we started out, it was really just about the risk parameters. We were only going to trade 1 contract. We were only going to lose $500 a day, and we didn't really put together much of a trading plan. So. What we've changed since then is we still have the same risk parameters. We're still looking for trades that are worth twice what we risk on them, and I think in large part we're accomplishing that, and that's the reason that we've been able to stay in it. The reason that I think we've kind of turned profitable in it is, we said it on the Coach's Combine Facebook Live thing on that Friday. I said, we put together some risk parameters, but we didn't really put together any plan.
No, we just kind of said, hey, this looks like a great place to short or a great place to get long.
So we said, oh, all right, go ahead, let's do that. So we've taken, a little bit of time now to kind of, okay, hey, crude's opening now. Let's watch it. Let's see if there's anything that we can do here. Equities are opening now. Let's watch it. Let's see if there's anything that presents to us here. We're taking just a few minutes at the opens for one. Somebody was mentioning that,
we're taking a lot of
our first trade was a lot of losses
and
at first. So.
Yeah, something we talked about this morning. We were answering that question. We're like, we just didn't have enough data yet to say, hey, that first one was a loser so consistently. This morning we came out, and that was our best trade of the day thus far. I know we're still sitting in a short and crude. It's been a
why
slow.
I have no idea.
I don't know why we got out of the one earlier, but so we're sitting in a trade right now, and so we can't base our trading off just because that first trade is a loser. It can't be something that we have to get that first trade out of the way. That's got to be done. We win or a loser. time of day. I think that was another thing we were doing. We were kind of missing the opens of everything because we had so much else going on. Now we're sitting down a little bit earlier planning these things. That's where those nice beginning trades are coming in as well. That's made a big difference for us.
And, the longer this takes, by the time we're done with this,
We're going to be pros.
yeah, we'll know exactly what to do.
Exactly.
But thank you again for the question. It has been fun for us.
Mm-hmm.
Next question's from Inga. Inga asks, what is your confirmation before taking trade in the SR levels? And I think with SR levels, I believe she means support and resistance levels. So as far as what's your confirmation when you're about to take a trade at support and resistance levels, I'll take this one. I think you guys can add anything you want. But basically, if you're taking a trade, initiating a new trade at a support and resistance level, it kind of seems to me like you're fading the direction, because basically if you're going to take a trade at a resistant level, the market has to come up. So if you're trying to initiate a trade, you're selling it. If the market's going down and you buy it at a support level, you'll be fading the trend down, hoping that there's support in the market. So it really, Inga, depends on what time frame you're trading on. If you're trading off of a 30-minute chart, as far as initiating the trade at a support or resistance level, you need to know if you're taking a short trade at a resistance level, you have to determine for yourself, has the market stopped going up? Am I getting any confirmation that there's actually resistance at this level? You might, on a 30-minute chart, you might want to see it print a few bars that can't penetrate that resistance level, the upside. Same thing goes for a 1-minute chart. If you're looking at support and resistance on a 1-minute chart, which I don't suggest, but I'm using it as just an extreme example from the 30-minute, basically you're going to want to see if that market finds support at the support level or resistance at the resistance level. If the market is testing that level, trading sideways and unable to penetrate that support or resistance, there's your confirmation. It sounds a little bit easier than it is, but watch the market that you're trading, and if it stops going down, go long, buy in that support area. You just want to see a little bit of time at that level to make a better determination of whether or not it's actually support or resistance.
I think that's great. I think it's another thing you can always just watch how that volume's coming in. I think volume tells us a lot about how those levels are holding in place, as well as Mick said it really well. Be patient, take your time, let that market show some support or resistance. A lot of people I talk to, they say, well, I had a resistance level up here and I had a short working and it filled right away and it never showed resistance.
Yeah.
Let that market react around those areas. See how that market's going to react. Extremely important to pay attention to.
I'm glad you mentioned that. At your support and resistance levels, if the market starts trading up through your resistance level, it's not resistance.
Exactly. Or you might be trading a very elastic market. Crude oil has some great levels, and sometimes it'll slip right through and bounce right back. You got to be patient. Let that market play around these areas a little bit.
Right, yeah. To play around, make a test, however you want to word it. You want to see price action around that level holding for your confirmation.
Only thing I would add to that is confluence. If you're looking at a resistance level and you're seeing confluence in another tool, maybe it's a stochastic divergence or a volume divergence, or maybe it's the high of a value area in the market profile. Any kind of confluence you can get in an unrelated study to the support and resistance, which is basically just simple equations. There you go. Now you've got a little bit better idea that, hey, this might actually be something that I'm going to take.
Yeah, I'm glad John said that. With any trade you initiate, it's always better when you have a couple stars aligning for you as opposed to just one, this is a support area, I go along here. Look for some other indicators in the favor of your bias. Next question's from Rob. When entering a counter trend trade, i.e. looking for price to reverse, do you or should you use a stop entry? I would say that's really up to you. If it depends. Some people don't use stops for entry. Some people do. Personally, I'd rather just watch the market, and when I see it turning, put it on. But if I'm going to be out, playing catch in the backyard or something like that while I'm working an order, yeah, I'm going to use a stop order. I think it really depends on your style of execution, but there's nothing wrong with using a stop entry, stop order for your entry. So it's a good question, but it's really personal preference, I think.
Preference.
I agree with these guys.
Keith says, what do you think about trading two accounts, meaning entering the market at the same price, and when you see the run, you close the loser out?
It's detrimental. I think it's detrimental when you are trying to trade two accounts, and from my understanding here, you're selling in one and buying in another, right?
What's the point? You might as well be flat.
Chances are, when you see that run start, you may be on the wrong side of it. You close out the trade that's going to win. Also, it can be taken.
There might be some regulatory issues.
I was going to say as laundering, correct?
Mm-hmm. Yeah, it's washing trades.
Yeah,
Washing trades.
Trade one account, manage your risk,
Yeah.
and the market, as Mick always says, market rewards those who manage risk.
Yeah, and if you shouldn't be taking risk on unless you have an educated bias or a real reason for doing that. If I feel like I'm very bullish crude oil, I just want to be long crude oil. I don't want to be long and short crude oil. Next question is from Mel. What do you guys suggest to do after 3 losing days, psychologically? I don't want to read the questions and then jump to the answers.
I think there's a lot you can do. I think one thing you can do is take a day off. Sometimes that's one of the best things for us. Number 2, 3 losing days is not terrible. There's nothing wrong with losing trades or losing days. Asked John and I about the beginning of our combine. But you stick to it. You focus on your plan. You see what's working, what's not working. Chances are maybe that market's been in a total different state than you've been anticipating, and that might just be psychologically something else is going on that you're not able to focus solely on your trade. It's a great time to take a day off. Also, talk with one of us, and we can help you break that down.
Yeah, I like how the question had the 3 days specifically in it, because I think and I think all of us have mentioned on these coaches playbook segments at one time or another that 3 days is, if you have 3 consecutive losing days in a row, it's a pretty good indicator that your strategy is not working in the current market environment, or that there's something else going on in your personal life. So that should be a little bit of a wake-up call to take your foot off the gas pedal. When trading's going really well, you don't want to take any days off. But when you're struggling, and 3 losing days in a row is something that every trader experiences, but that should be somewhat eye-opening to you. And at that point, take a little time off. Doesn't mean you don't need to turn the computer on, but stop fighting the market. Maybe trade on sim or just sit there on your hands. But you don't want to keep fighting it.
And another suggestion is, we are all aware, 3 consecutive losing days, 3 consecutive losing trades. It can all beat you up. It can take your mental capital. It can make you feel bad about yourself, and that's the wrong thing to do. We can't afford to do that. We can't afford to beat ourselves up as futures traders, and we will never be perfect as futures traders. So don't get the feeling that there's something wrong with you, that there's something that you're doing wrong, that you don't deserve to make money, that you don't deserve to be a futures trader. You do. It's just a part of the game. Sometimes you're not going to be in sync with the market. Sometimes you're going to be disoriented. Take that as a lesson. Go do something good for yourself. Take a couple of days off. Go out to dinner. Go see a movie with your boyfriend, girlfriend, wife, whoever. Spend some time away. Treat yourself well, and don't let the market judge who you are. You judge who you are. The market has nothing to do with it. We're all good people. We all deserve to make money. It's just a matter of figuring out how. Don't attach your self-worth to your P&L.
You gonna drop the mic now? Another question here from Kyle. What are your favorite trading indicators for choosing where to enter a trade? Oh, I like this question.
Should I start? Am I up?
Dice.
I'll take it.
Even we buy, odd we sell.
Done. Flip a coin. I know some guys, I've heard stories about guys who have flipped the coin.
Yep.
Because and if you manage your risk, I think
you can make money.
You can make some money. Don't recommend that. I think a lot of it I think one of my favorite things is I really enjoy looking at that volume profile. It tells me a lot about what that market's doing especially in that day time frame, to pay attention to where those trades at, where that volume's at. I think that really helps me understand where everyone else is getting in on these trades, and so that's personally something I'm watching a lot throughout the day.
What's your favorite indicator?
Bet you I could guess John's.
Well, see the profiles to me. I mean, it's good. It's a good
I guess.
organization of the information, but it's not an indicator. It's not a
But I think
trade.
I think it's what you use, because every
Absolutely.
single trade we talk about,
Oh, I'm looking at that.
we instantly go to
Absolutely.
the profile and take a
Absolutely.
look at where we want to get in,
Absolutely.
because it helps pick what our risk is.
Absolutely, and that I think is probably one of the strongest parts of the profile is the way it organizes the information.
Mm-hmm.
It tells you where balance and imbalance are and where those are going to change. So, is it an indicator? No, but is it my favorite tool? Absolutely, absolutely.
My favorite tool is just the candlesticks themselves for getting in a good entry point. If the market's going up and you get a nice little pullback, buy them. Market's gone down, you get a nice little rally, sell them. Those are my indicators.
Simple.
Trying to catch a piece of the trend for the day is, I think, a day trader's job. That's where the money's made. Catching, not the whole trend for the day, it's not going to happen maybe once a year or something, but catch a chunk of the trend for the day, and you do that by following the trend.
Get your bite out of the middle.
Yep.
Exactly. I think it all comes down to keeping things simple. Don't overcomplicate it.
Yep.
Everybody I talk to that does, I see that they're really having a hard time is because they've got too much happening, and they've got contradicting indicators.
Yeah, there's a lot of garbage indicators
There
out
sure
there.
are.
Thousands of them.
I think intuition is extremely important.
And none of them work. Or all of them work. It all depends on you, how you use them, your decision making.
Yeah. And I'll add, the more screen time you have, the more comfortable you will be with where you put these entries on. The more intimate you are with a specific market, you're going to have an easier time of finding, the buys and sells. Granted, every session's different, but if you focus on one market, you're going to be able to read the price action better than if you're looking at 10 different futures markets out there. So keep that in mind too. The more time you spend watching these markets, the better of a feel you'll have for them. And it's harder now to get a feel on the trading screen as opposed to the pits.
Oh, yeah.
Much harder.
Yeah.
Much harder.
So you've got to watch a little bit more because you don't have your other senses like eyes and ears.
Like Merrill Lynch calling in a trade. Hey, here it comes. I know it's coming.
And, or the fear in the eyes of your fellow traders. You don't get to see that.
John loves scaring people. It's Halloween next week.
Wait till next week.
We may or may not have a treat for you. All right.
Or
Sorry
trick.
about that. Listen, next one's from Greg. When you look at a market, will you only go with the prevailing trend? For example, look for intraday pullbacks to buy, or do you trade in both directions? I feel like I part answered
I think
that
you
with
just hit that
my
one.
favorite indicator there. This question, I think there's my answer to it, John's answer to it, Danny's answer to it, and there's so many traders out there that have different strategies. You've got to find one that fits your personality and that you like and stick with it.
I know a lot of traders that do really well in range days. I know a lot of traders that struggle in the range days, and so those ones that are struggling in the range may do very well in a trending style day. Every single trader is going to be different. Maybe you do well in both, but I definitely think you got to find your style, like Mick said, and capitalize on that.
Yeah, and that's why some of the great traders out there don't trade every day, every week, or maybe even every month. They wait for their environment, their setups, and they're patient. And you know what? They're not giving away money in the meantime while they're waiting for that. They're playing defense and they're protected with those profits or whatever equity they have in their account. And when the market climate changes, they're ready to pounce.
And with regards to that, it's all related to the market state. Some days are directional. You only want to trade that one direction. Some days are rotational. You may be able to fade the extremes, sell the highs, buy the lows, maybe even several times that day. There's two basic market states: directional and balancing. Out of balance, in balance, whatever you want to call them. Two different strategies. You can succeed in both.
Yep.
Nailed it. Linda asks, which of the metrics on the TST dashboard would you pay the most attention to in order to improve your trading?
John, you want me to answer for you? I know John's answer. Risk-reward ratios, winning trade versus losing trade.
I like risk-reward ratio the most too.
Mm-hmm.
And to go along with that, I also like to see the holding time of winners and losers. I think, and it's not always going to be the case, but you should be impatient with your losers and more patient with the winners, depending on how big of a move you're looking for. You'd want to see yourself spending more time in your winning trades than your losing trades. You want to cut those losers quickly.
Agreed. I do want to say, I know a lot of people are very focused on that winning percentage. I don't think you have to worry about that so much, so long as you focus on your winning and losing trades. Those ratios there are a lot more important than that winning percentage. Psychologically, it's nice to see that 80% win rate, but we don't need that to be successful. We don't need that to be extremely profitable in this industry. And so be honest with yourself when you are looking at these things. Which one's going to matter most to you? And I think being profitable is much more important. What do I say? I say it's a lot better to be profitable than right sometimes.
And I want to share one of my pet peeves that I sometimes see on the trade reports. Losing days that are larger than a trader's biggest winning day. It's never going to add up. If you're risking more on any given trading day than you are willing to make, it's just not going to add up. We want one winning day, an average winning day, to be able to make up for at least one, if not more, losing days. You don't want to have one great winning day. You don't want to have like 2 weeks of profitable trading wiped out by one winning day. There's nothing more demoralizing than that. I've lived through it on a number of occasions. So that's a pet peeve I just had to share.
Well, I can just go now. You guys,
We got this.
You guys got this.
You can retire.
All right. This one, last question. We'll give it to John since he's feeling like he's missing out here. John, can you talk about the value of a trading network in the futures business and how to network well? It's a good question.
I miss the trading floor. Part of the fun of being on a trading floor is to be in a huge community of like-minded people. Granted, many of them were insane. However, all of them carried with them a lesson that made traders, made me who I am, made the best traders in the world who they are because they were part of that community. I think it's really important to surround yourself with people that are interested in the same things, people that think differently than you do, that may see something that you missed. You may have something for them that they've missed. I think the networking is a great way to basically rebuild that community. I think it's a really, really important thing. I know on Squawk Radio they have the community journal. I hear it's going really, really well, and that excites me. It's traders helping traders.
Mm-hmm.
Mm-hmm.
Granted, on the floor, there were a lot of people who weren't there to help anybody but themselves, but you knew who they were. I think in a trading networking place or facility or whatever it is, everybody's already geared towards, okay, what can I bring to this?
Mm-hmm.
And what can I take from it? It's never just take. It's always, what can I bring and what can I take? It's a give and take thing. How to do it well Well, on the trading floor, there was usually alcohol involved. Not necessarily needed for this case. You really want to just have somebody that is going to be somewhat of a leader in the group that's meeting at that time. They're going to have some specific ideas to think about and talk about, and then basically honesty, forthrightness, and openness is all you really need to have a really good trading meetup.
You want to be around like-minded people that are there that are going to help fuel your passion. You know, it's trading's an individual sport for the most part, but you can have people that you respect to bounce ideas off of. It's like a trading network. I kind of think of as a team. You know, everybody's there to drive towards one goal, success, winning, and you're around people that are fueling your passion. Get out there and start talking to people any way you can. We have our blog, our community, external ones out there. Do whatever you can to rub shoulders with people, because there's no doubt that one person you talk to is going to know things that you don't know, and probably you'll know stuff that that they don't know.
Yeah. I think this is networking is extremely important because it gives you a chance to bounce ideas. None of us here are competing against each other. It's not a one-on-one sport where if I do well, Mick's going to do bad. We may be able to do both well or be able to help each other if one of us has found a nice group. I think that was one of the coolest things about the prop firms we work at is your team. So if one person's kind of down, the other ones are there to pick them up and say, hey, where have you been wrong? Let me help you out because I found really great success here these last, there's someone there to pick you up. And it's not trading the same way, but it's more or less a lot of this is typically when we're struggling, it's in the head. There's a lot of psychological things, and having someone that's been through that, knows those highs and lows, those emotions that are attached to this, it's really important for us to have someone that we can relate to in those experiences. Whether we are the one on a low or we're the one on the high that can help someone out. It's extremely important.
Yeah, and most of you guys are out there trading from your homes on your own. So, you need a little camaraderie. It's important.
I think I learned more about playing cards in the pits than anything. I think the trading was there. And from hour to 2 hours a day, there's a lot of downtime. When we're on the screen, it feels like this is 24/7, or 24/5, I should say. Remember, in the pits, there was a lot of downtime. There was a lot of camaraderie. There was a lot of, bashing with each other, having fun, and I think that's another great reason for this networking is because you can have those groups of people that you're working with.
And maybe one of these days you guys will let me in your group.
I have to sit with you all day, though, already.
Well, you're always bashing me. I should be in the group.
Here, drink this, and
Yeah. Well, all right. I think we're good on questions.
Yeah.
I think there was one out there I just wanted to touch on. We are not Packers fans. Go Bears.
Oh, I saw that one.
I saw that in there. I will make it a point to bring that up. We live in Wisconsin. A lot of us here, the three of us, we're kind of neighbors. Go Bears.
The Bears.
The Bears. Dicka.
Go Hawks.
See
All right.
Wisconsin compete
Well,
with that.
Thank you, gentlemen.
Yeah, that was fun.
Your
Thanks,
wisdom
Rick.
and wit is always appreciated. I know I love it. I know that everybody does. Thank you for joining us. Thank you for the questions. We'd like to do this more often if this is something that would benefit everybody, and that's our real goal here is hey, be part of the community, right?
And we can pepper in these question coaches segments, whenever. Give us some feedback. Let us know what you thought. Send some more questions in, and we'll try and make it happen.
And any questions you have, performance coaches are available. Look it up on the website. Book a complimentary performance coaching. We would be happy to talk to you and discuss any of these issues and more that you would like to talk to. Gentlemen?
Always a pleasure.
One last thing. Sunday, was our Annie's birthday. Now, she's over there.
She's shaking her head.
We want to make sure and tell her happy birthday. So type in happy birthday, Annie, and thank you very much.
Thanks, everybody.
Annie's the brains behind all this. So
Absolutely.
She is.
We got to give her a plug every so often,
Absolutely.
since she doesn't want to join us.
Annie, you trade well. Get out there
Keep
and profit
recording
now.
while we say stuff about you.
She's just waiting to hit end.
Face is red right now.
All right. Get out there and profit, folks. Trade well. We'll see you tomorrow.